Hello and welcome back to The Note. We've had a relatively calmer day today. We've still had a huge fall in Asian stock markets. We still had another leg down in the oil price with WTI back below $30 per barrel. But when it came to the bond market, it was relatively calm. When it came to the US stock market, the S&P 500 ended almost unchanged for the day, having had quite a strong rally into the close, suggesting that at least the very sharp sales action, the very strong downward pressure that we saw for the last few days is abating slightly. It's also obviously got a lot to do with the fact that we now have to wait for Janet Yellen's testimony. There is very much excitement over this and a very wide variety of opinions. I've had a research report today suggesting that negative rates are possible. I've also had various analysts suggesting that she needs to hold firm and suggest that she is still ready to raise rates several times. So an unusually wide variety of opinions facing her. Now, overall, the sentiment is that the Fed is much less likely to raise rates than people had previously thought, and that is beginning to have some important and possibly positive effects on the markets. If we take a look at this first chart, this shows you how the yen, the euro, and the Swiss franc have done compared to the dollar, and you can see that all have rebounded very significantly in the last few days. In the case of the yen, it's actually stronger than it was a year ago against the dollar. The euro has basically lost nothing over that time period. If the dollar does begin to weaken a little, if the assumption of an ever stronger dollar thanks to a Fed tightening policy is done away with, that will relieve a lot of pressure elsewhere in the world economy. If we now take a look at a second chart which shows us how developed market stocks have done compared to emerging market stocks, again you can see what does look like possibly a turning of a tide, a very sharp reversal. Emerging markets have started to outperform these last few days. Obviously, this is after a hugely well-established, long-lasting trend, but it's still interesting. A weaker dollar does relieve a lot of pressure on the emerging markets. A weaker dollar does, however, require the Fed to be noticeably less aggressive in raising rates than had previously been expected. We will wait with bated breath to see exactly what Janet Yellen says on Wednesday morning.